Welcome to our comprehensive guide on Uganda tax residency. Understanding tax residency in Uganda is vital for anyone looking to live, work, or invest in this beautiful East African nation. Whether you are an expatriate, a digital nomad, or a business professional, navigating the complex tax landscape is crucial for effective financial planning and compliance. In this video, we'll explore the essential factors that define tax residency in Uganda, the benefits of becoming a tax resident, and the key steps you need to take to establish your residency status. Let's dive in. So what exactly defines tax residency in Uganda? Primarily, it revolves around your physical presence in the country and other specific criteria laid out in Uganda's tax legislation. The Uganda Revenue Authority, or URA, uses these criteria to determine who qualifies as a tax resident, meaning who is subject to taxation on their worldwide income. The most straightforward way to establish residency is through the physical presence test. Understanding the 183-day rule is crucial here, as it aligns with global standards for evaluating tax residency. Tracking your days in Uganda can greatly influence your tax obligations, and tools like Pebbles can facilitate this process. Now let's talk about the tax implications of becoming a Ugandan resident. If you establish your tax residency here, you'll find that your financial obligations change significantly. As a tax resident, you'll be taxed not just on the income you earn in Uganda, but on your worldwide income as well. This means it's essential to understand the implications of Uganda's progressive tax system, where rates range from 0% up to 40% depending on your income level. Additionally, being aware of Uganda's double taxation agreements with several countries is crucial, as these can help mitigate the risk of being taxed twice on the same income. If you're planning to become a tax resident in Uganda, there are several key steps you need to follow. Firstly, it's crucial to understand the residency requirements, particularly the 183-day rule. After that, securing proper documentation, like the right visa or work permit, is essential for legality. Once you're in Uganda, registering with the Uganda Revenue Authority is a necessary step in establishing your tax obligations. Furthermore, tracking your days diligently in Uganda is vital, especially if you're approaching that 183-day threshold to maintain compliance and verify your status. Finally, don't hesitate to seek professional tax advice to navigate Uganda's complex tax landscape efficiently. Lastly, let's discuss some common challenges and best practices for managing your tax residency in Uganda. From maintaining proper documentation of your time spent in the country to navigating the complexities of banking and financial reporting, there are hurdles that many expatriates face. Utilizing digital tools to track your presence can significantly alleviate these challenges. Additionally, connecting with local tax professionals can provide invaluable support, helping you bridge cultural and language barriers while ensuring you remain compliant with Ugandan tax law. As we conclude, remember that establishing tax residency requires careful planning and awareness of specific requirements, so stay informed to minimize any potential compliance risks.